What's going on, investing masterminds? In today's stock analysis, let's take a look at a company that will be celebrating its 50th anniversary this year. Let's take a look at Starbucks. My name is Dash, and welcome to Mind Over Finance. And before we kick off this video, I want to tell you about the investing platform Webull. So this month, when you sign up for a Webull brokerage account, you can get one stock valued up to $250, and then when you make your first deposit of $100, you can get another free stock valued up to $1,600. And if you're lucky, you might end up with some really cool stocks. And if you're interested in trying Webull for yourself, you'll find a link to it in the description box below. And yeah, it does show me some love at the same time. Starbucks, ticker symbol SBUX. Starbucks is currently selling for $106.48 a share. It has a market cap of $125.4 billion. In the last 52 weeks, Starbucks has ranged from $50.02 in price all the way up to $107.75. And while Starbucks is profitable, it is selling at a pretty high PE of 191 times earnings, especially when you consider that the industry average is only 41 times earnings. And according to Webull, Starbucks is a coffee roaster and retailer of specialty coffee with operations in approximately 82 markets around the world. The company has over 32,000 company-operated and licensed stores. It operates through three segments: Americas, International, and Channel Development. Starbucks' core business is selling coffee and tea, and the different iterations of that. You can go to a Starbucks shop and have a barista make you a latte or an espresso or whatever you like. But you can also go to certain grocery stores and buy your own bag of Starbucks roast and make Starbucks coffee at home. In addition to coffee and tea, Starbucks also sells food products, and they do some light merchandising. So think like your tumblers, mugs, etc. Let's take a brief look at some numbers. If we take a look at Starbucks' revenues, that top green line, from 2016 to 2019, there's a steady increase in total revenue. And then there's a drop off in 2020, of course, probably because of the pandemic. And if we look at the bottom purple line, gross profits follow the same pattern from 2016 to 2019, a steady increase, followed by a dip in 2020 because of the pandemic. If we look at Starbucks' net income in the last 5 years, we see steady increases from 2016 to 2018, a drop off in 2019, and again, an understandable drop off in 2020. This is important to pay attention to as an investor: shareholders' equity. So if you take total assets minus total liabilities, what's left over is what's left to pay investors. And in this case, for Starbucks, in 2019 and 2020, the shareholders' equity was negative. And as an investor, you don't want that to go on too long because it could signal some problems going on with the company. And understandably so at the moment, because I know restaurants were hit really hard during this whole situation. However, in Starbucks' case, I do notice that the shareholders' equity was much lower than normal in 2018, went negative in 2019, and then of course with all the hard times happening with the vid, I can see why it would be negative in 2020. But I'd have to dig a little bit deeper into the numbers to kind of find out why shareholders' equity was as low as it was in 2018 and 2019. Not a deal breaker, but just something to pay attention to. Starbucks' current ratio is riding on the rims a little bit at 1.06, so at the moment it's slightly more than able to cover its current liabilities with its current assets. And this is me in learning mode just a little bit because I'm trying to understand why debt to equity, return on equity, and return on invested capital aren't showing up at all. And my guess is that it has something to do with stockholders' equity being negative. Now, this might not be standard stock analysis practice, but I wanted to show you what the Starbucks Roastery looks like here in Tokyo. I really like some of the things that Starbucks is doing here in Japan, and I don't think everybody gets a chance to see it. It feels to me like everybody is really focused on stock price fluctuations right now. You know, this stock is going to double, it's going to 10x, oh, buy now, and there's that pressure to buy. And I get it, that's probably one of the most important things. You want to see your stocks grow, you want to make money. But at the same time, I don't want to lose sight of the fundamentals or the business underneath the stock price. I think online sales and delivery are a major opportunity for Starbucks. The pandemic forced Starbucks to close a lot of their stores, and it kept a lot of customers from being able to visit brick and mortar locations. And at the same time, you saw these drastically increased revenues for things like DoorDash, for things like Uber Eats. And even though I do think things will return to some state of normal, I do think remnants of the whole mobile/at-home delivery, remnants of that are going to stay. I'm not exactly sure how Starbucks would work that into their ongoing business model as a profit driver, but if anybody can figure out how to do that, I'm sure that Starbucks could. China is a major opportunity for Starbucks. Starbucks' main market is America, namely the US. But when you consider that China is projected to be the world's largest economy within the next decade, if the goal of Starbucks is to grow, and they've already had some success at entering into the Chinese market, they already have a foundation, then China might be where it's at. I think the Starbucks Rewards program is a major opportunity. So you can already use that program to order ahead, and it incentivizes customers to buy more Starbucks products. And the Starbucks Rewards program is popular in the US and it's popular internationally. I think there's a way to maximize this program to increase revenue even further. And in my head, I think Amazon Prime is to Amazon what maybe Starbucks Rewards could be to Starbucks. I think changing tastes are an opportunity for Starbucks, even though you could see it as a threat as well. It feels like consumers are becoming more and more health conscious over time. So it's becoming more and more important to offer healthy options. But I really do think that Starbucks handles that responsibly. But it really does feel like Starbucks is already paying attention because you are seeing more plant-based food and drink options. Things like almond milk, things like plant-based meat. The pandemic is still ongoing. Yes, there's light at the end of the tunnel with vaccines and boosters, etc. But
we're not done yet.
How Starbucks navigates the business environment post-pandemic, how they reopen stores, how they time everything, this is going to be critical to their success, especially over the next 2 years. I know this might sound a little bit weird, but I think America can be a threat to Starbucks. A pretty big chunk of Starbucks' revenue comes from the US. So in part, it is susceptible to what happens in the US. Yeah, the pandemic is one side of that, but when you hear about so many Americans squabbling over the left and the right, gender, race, sexual orientation, and everything in between, how Starbucks responds to those things is going to affect its business. And while I do feel like Starbucks is the leader in the space, no business is immune to competition, especially over time. But Starbucks has been around for 50 years now. It's an established blue chip company. And with these companies, you do have to keep your eyes on the horizon because there will be other really strong businesses that spring up. Starbucks is a cyclical stock play. And this just goes to show that I'm still learning because when I think cyclical in my mind, I think of a business that ebbs and flows with the seasons. And that is one definition of cyclical. Cyclical stocks represent companies that make or sell discretionary items and services that are in demand when the economy is doing well. They include restaurants, hotel chains, airlines, furniture, high-end clothing retailers, and automobile manufacturers. These are also the goods and services that people cut first when times are tough. Depending on which analyst you talk to, Starbucks kind of feels like it's either fairly priced or only slightly overpriced. So while you might not be getting Starbucks stock at a discount, you're probably not paying a crazy premium on it either at the moment. Starbucks is one of those companies that's the best at what it does, and I like seeing what they're doing here in Japan. And it's one of those companies that I would probably be willing to dollar cost average my way into. Like any good stock I'm serious about buying, I want to try to get it at a discount. But in this case, I might be willing to pay a slight premium. Well, that'll do it for today's video. As always, thank you so much for watching. If you enjoyed this video, please don't forget to turn that like button blue. Share, and if you're brave enough, subscribe. And join me on this journey to grow Mind Over Finance to 10,000 subscribers strong. And I'll see you next time, guys. Peace.